Real Estate and Mortgage Show, your go-to spot for everything home buying, selling, and financing on News Talk 580 CFRA.
Welcome back to the show, everybody. We got a caller in, guys. We got Doug from Ottawa. Doug, welcome to the show.
Good morning. How are you?
Really good, thanks, Doug. You?
Good, thank you. My question was kind of prompted by your construction mortgage issues, and my question is related to the construction mortgage I was looking at getting, but the house I want to build it on a slab, not a regular foundation.
Yep. Again, I mean, some lenders, once we get the plans, the blueprints, we're able to send it off to a number of lenders and see what options we have. So, lenders are more open looking, but again, it all depends on the loan to value. So it all depends how much you're borrowing versus, what the house value is going to be at the end. Construction mortgages are very, very reliant on someone having cash going into it to be able to build it. So, I've got clients that call me and say, Frank, I want to build a house, but I've got a lot that's $200,000. I owe $150 on it, and I got about $20,000 or $25,000 set to start. And it's like, you're not going to get a construction mortgage through a bank because the bank is not giving you money to get the project going. The bank is saying, once you get to certain levels of your construction phase, we'll give you money. And if you go to a major bank, most of them won't lend you on the lot. They want the lot to be paid free and clear. And at the same time, they want you to get to the stage where the house is enclosed. So for anyone that's built a house before, I mean, that's putting out 40, 50, 60% of the money up front before the bank will lend you any money because they want no risk. The banks do not want to take over a house that you can't afford anymore because they're not a construction company. They make it very clear. We lend money to get paid back. We're not a construction company. We don't want to be taking over a house.
Hey, Doug, can I ask you a question? Why are you building on slab? Why aren't you putting in a foundation, a basement?
I'm old enough to realize that basements, the stuff you put there usually ends up dying. So it's just a place to go to die. So I'd rather not have a basement at all. If I want storage, I'll either create space or I'll build a garage inside the house. Yeah,
I'm just thinking of your resale when you do decide to resell that. I mean, there's nothing wrong with slab. I'm just saying that it's the resale isn't as advantageous without that basement for sure. So,
okay.
I mean, if you're building for yourself, that's great. If this is your forever home, that's amazing. You build the way you want. But if you have some thought of somewhere down the road that, you're going to sell the property, on slab is definitely not as advantageous as building a basement.
Okay, so there'd be a specific market for an on-slab type build compared to a regular foundation.
100%. Yeah, 100%.
Awesome. Thanks so much for the call. Oh, sorry, Doug, go ahead.
Just a quick one on. So, was there a rule of thumb on how much cash you should have available when you go to the bank for a construction mortgage?
Well, there's a rule of thumb is that you need to get, if you go through a major bank, most major banks will want you to get to completion to about 40% complete before they give you any money. And 40% complete entails, in your case, there's no foundation, the slab, but also that the house is framed, the windows and doors are installed. So in essence, it's closed in. The roof is shingled. Maybe the brick and or siding work isn't done, but everything else is done. And that's generally the first stage that they want you to be at before they lend you any money.
That could be a couple $100,000.
Well, depending on the cost of your house, right?
Yeah.
So
yeah, that's what I'm looking at too. So
yeah. So do you own a current home right now and you're building another one, or?
Yeah. We currently own our home. We haven't sold it yet. It's just a question of I'm just trying to plan, and it's going to. I'm retirement now, so it's just a question of how much I need to kind of move forward.
Yeah, so a cheaper way to do it could be if you've got a lot of equity in your current home, a cheaper way could, instead of getting a construction mortgage, could be to do a home equity line of credit on your home so that you've got access to the money as you're going through your construction phase and you're only paying the interest as you're getting work done as opposed to getting the money up front kind of thing. So,
and then as you get close to
the end,
you sell your current home.
You sell your current home and then you pay off, or if you still need a mortgage, then at least you're getting a mortgage closer to the end of the construction project, which is much easier.
Okay.
Yeah, if you have the equity in your home, that is the smartest way to go for
100%.
sure.
Awesome. Okay, thanks a lot for the call, Doug. Really appreciate it.
I appreciate it. Thank you. Bye-bye.
Yeah. Awesome.
And the other thing about financing, though, on construction homes too is the insurance. But that's on any home, right? So any type of home that you get, part of the mortgage approval is that you have sufficient insurance coverage on the home. So, lawyers call it, they need the binder. And the binder basically is that the house is insurable. But I think you're probably seeing it on the real estate side too, right, Paul? I mean, we see home inspections, financing. I think another one, if there's anything quirky about a house, you need to put almost a home insurance policy because, if a home is on oil instead of on gas, there's some insurance companies that simply will not insure that.
They won't even touch it. Yeah.
And therefore, now you can't get a mortgage on the home either, and people forget about that, and then all of a sudden they're panicking on that last week. So I don't know if you're seeing it more or...
No, not really.
No? Okay.
No.
Wiring?
Is that a call?
Mm-hmm.
Oh,
yeah.
It's another call.
Yeah,
Okay.
Wiring and stuff too, Paul? Or see any of that stuff?
Yeah,
Does a home inspection play a big part in that?
Absolutely.
Okay.
Absolutely. Like, there's certain things that certain insurance companies will not cover. And, I don't recommend you building
Knob and
with
tube.
Absolutely. Knob and tube. And
asbestos, right? And there's still that. I think the UFI clause is still on the purchase agreement.
Still in the purchase agreement. Yeah, still in there.
Yeah. So there can be some tricky things, regardless. But just overall, with Doug's question, like slab's not a big deal.
Slab's not a big deal.
They just want to see the plans. They want to see what's
I don't
coming.
like it for resale. I definitely don't like it for resale.
enough.
Now, for example, though, somewhere like Constance Bay, there's a lot of built on slab up there because there's some water issues, right? So people don't want that basement. So on slab is pretty normal up there. But in general, if you're building something in suburbia, Canada, Orleans, Barrie, any of those places, I wouldn't go with slab. Just for resale purposes. I mean, yes, it's easy, but I would probably put a full foundation, full basement in there.
Yeah,
But
right.
that plays a part in the financing too, because keep in mind, a mortgage lender, a bank, wants to make sure that property's marketable should they have to take it over.
Right.
So it does play a part in that as
it
well.
It is marketable. It's definitely, listen, there's loads of houses every day selling on slab, but if you're building brand new right now, my option would be to have a full basement in there. It doesn't have to be finished, but I would definitely have a full basement.
It's one of those things that's very personal. I'd buy something on slab in a heartbeat.
I would too.
Yeah.
But at the same time, just for resale value, it's not ideal,
Sure.
right? There's lots of things I would buy for me personally that on resale is not ideal.
Right.
It's going to sell. There's always a house for sale.
But as you said to Doug, like if this is your forever home and you're going to be there 10, 15, 20 years, do what you need to do.
Yeah, you're leaving it to your kids, or you're going to sell it when, by the time you go to maybe a retirement residence, you're going to sell it at that point. Yeah, just enjoy your house. And there's lots of things that people do that I say, I probably wouldn't have done it for resale, but for you to enjoy, you do what you want.
Yeah.
You do what you want, whatever you want to enjoy.
For sure. Hey, listen, we had another question come in off the realestatemortgageshow.com site from Charles, and this one's for you, Paul. Says, I own an older investment duplex in Vanier with a $250,000 mortgage on it. Currently, I'm taking in about $1,250 a month for the 3-bedroom unit and $1,450 a month for the 1-bedroom unit. Given the recent changes in the Ottawa zoning bylaw, which now more broadly allows small multi-unit builds, additional dwelling units, etc., would it make sense financially and practically to upgrade or convert the property into a multi-unit up to 6, or even subdivide and add 2 or 3 townhomes on the lot?
Great question, because there has been changes in the zoning bylaws, which is amazing. And a lot of people don't know about them, but what they're trying to do is intensification. I mean, we got a lot of immigrants coming into this country, and we need houses, we need homes, we need doors, we need rooms. And so what they're allowing now is you're allowed to go, any residential property is now allowed to go 3 stories high, which is
Anywhere.
Oh, which is brand new. However, depending on the size of your lot, you could probably go higher and add more. I was talking to my mom this morning, and she's working with someone in Vanier who has a bungalow on a huge lot in Vanier. They're actually adding 10 or 11 units. So they can go much bigger. What they're trying to do is create more doors and more living for people.
Right.
So Alta Vista is going to be able to take advantage of this because they have huge lots. Vaniers has huge lots. So you have to check your zoning that you are right now, and also check what you're allowed to do. But they have allowed you now to go higher, and most big lots, you may be able to do more than just a couple units or just going that 3-story high. You might be able to add more units depending on your zoning. So that's a great question. Now, the second part of that question was, is it affordable? Should I do it? I believe it was.
Yeah,
right?
yeah. He said, what factors should he consider, like zoning costs, potential rents, and how does he evaluate if it's a good decision or if it's too risky of a decision?
I could tell you right now, it's a great decision. You do have to find, obviously, a builder and weigh out the cost of doing that. Talk to Frank about some financing. But to see how much it's going to cost you. If you have the funds or you can get the funds, I would do it because I'm a big believer that the more doors you have under one roof or the more doors that you have on one lot, it's a great investment. It's a great investment. You couple that with the new Bill 60, that it's much more advantageous for landlords now. It's easier to rent out and to have good tenants. You couple that with the new zoning bylaws. It's beauty for investors right now, and I love the new zoning bylaws, and there's obviously more to come out of it. But the new zoning bylaws is basically allowing you to put more units on your lot,
on a single lot,
on your single lot. So if I was him, if I had a decent sized lot and I was in one of those areas, and you could afford or talk to Frank and get the funds to do it, you are going to make way more money than if you just right now he's a duplex, so he's got 2 streams of income coming in. Well, if he checks the zoning bylaw and he's able to actually put, 4, 6, 8 units on there, now you have 4, 6, 8 streams of income coming in on one lot. Absolutely, I'd do it if you can stomach it and can afford it. Like I said, you couple that with Bill 60, and it's more palatable to be a landlord now. So.
Right. So are we back to talking about construction loans again and this type of thing as well, like doing a renovation? Like that's not technically a renovation, I guess.
It's not. I mean, it sounds like it's a tear down and then a brand new build, and you're getting into multi-unit residential. Great program with CMHC on that kind of stuff, but you got to be very, very patient because this program with CMHC is 3, 4, 5 months before they actually give you an approval. So it's not it's not a quick fix, but generally in projects like this, time is on your side. If you get ahead of it, because you're not going to start breaking ground for another 4, 5, 6, 7, 8 months by the time you get all your permits, so you've got
get your contractor lined up, your plans done, all of that.
So it's all very time consuming.
Yeah, but all possible to do financing on a project like this, even with an existing mortgage on the property.
Again, great to hear that the city and the province is getting involved in these programs.
Finally,
as long as now they keep those developmental fees
down,
in line, in check, and they reward people for doing this kind of stuff as opposed to profiting it from it. So
I read an article this week that by 2030, I can't remember the number, but we need X amount of thousands of homes to be built in Ontario.
Yeah, we won't get there.
We're going to hit about 10% of that goal.
Yeah, we won't get there.
10%.
Right?
So, but this allows us, the new zoning bylaws
maybe
allows
gets us to 20.
Gets us closer by doing something like this, and for the longest time, I've been saying, I'm always a big proponent of buying doors and buying investment properties. This year, I changed my tune. I definitely changed my tune, and I said, being a landlord sucks, and I'm a big believer in buying real estate to build wealth, but being a landlord does suck because the tenants had all the rules. So now Bill 60 turns that back to more of a fair game for landlords. And now I'm back on buy doors because it's a little bit easier. So, you got this coupled with the Bill 60 and we're in a great spot. I do have a question that just came in actually for Frank.
Yeah.
We're going to go on break though, I think. And then we'll,
okay. Yeah, we'll
get to the...
all of a sudden he's the host again this week, eh? The only thing we're missing is the rambling and cutting me off this week,
Because I know the question's going to be more than a minute to answer. So
well, with you, absolutely.
Because I'm very detail-oriented.
Have a question, go to realestateandmortgageshow.com or give us a call at 521-TALK, 521-8255. We'll be right back. Welcome back to the show. To the phones we go. We've got Ron on the line asking a question about reverse mortgages. Ron, welcome to the show.
Good morning, lads. I own a condo. It's fully paid for. I see all these ads for reverse mortgages. What is the catch?
Well, there's no catch, really. I mean, a reverse mortgage is exactly the opposite, and hence the title of what you get through a traditional mortgage. So a traditional mortgage, you borrow money, you pay it back. A certain portion of your payment goes towards principal. The rest of it goes towards interest, and your mortgage balance comes down. On a reverse mortgage, it's intended for anyone that's 55 years or older, and basically it's for anyone that now their income has gone down or the cost of living has gone up the way it has, and what you want to do is you want to borrow from the equity in your property and maybe not make any mortgage payments so that you can continue to stay in your property. So the reverse mortgage has the opposite effect, where you borrow money from your property. So let's say you borrowed $100,000, and if the interest rate, and again, I'm just going to use 5% as an interest rate, that means you don't make any payments throughout the year. And at the end of the year, now instead of owing $100,000, you owe $105,000 because $5,000 has accrued in interest, and so on every year. So
great program for someone in who's got their house paid off and would need
100%.
a little bit of cash.
Doesn't want to
disposable
move.
income.
Doesn't want to become a renter. Wants to stay in their property. And we read a lot of stories on, the government has made some comments and the media has made some comments about, sometimes you have two senior people that are in a 2,000, 2,400 square foot home and they're actually making it hard for the market because maybe they shouldn't be in that home anymore. But who's to say to tell them that they shouldn't be in that home? It's up to them. If they paid their house, it's up to them. And if they want to get a reverse mortgage on it, good for them if they want to continue to stay in their house.
What would the term be?
Well, the term is no different than a traditional mortgage. It's 1, 2, 3, 4, 5-year term. You can choose that term that you want. And at the end of it, it's no different than, again, a traditional mortgage. You pay it off. But again, like I said, on the reverse mortgage, if you borrowed $100,000 and you took it for a year and it's 5%, at the end of the year, you want to pay it off, you owe them $105,000. If you sell it, obviously the mortgage gets paid off, and no different than a traditional mortgage, depending on how much time you have left and what the interest rate on it. They have a calculation there as well to whatever the penalty is based on the term you chose and how much time you have left on it.
Well, thank you very much.
Oh, you're very welcome.
Good question, Ron. Thank you.
Yeah.
Hey, and back to the phones we go. We got Dave from Ottawa has a question about his mortgage renewal. Dave, welcome to the show.
Yes, hello.
Hey.
First of all, I want to say thank you. About 4 years ago or more, just as the rates are really creeping up, I was wondering what to do with the costs and stuff, and you recommended to me blend and extend.
Yeah.
Which, of course, my bank never did, and I got in at 2.25 at the time.
Except for it's coming up for renewal now. That's
it's
the part
coming up in March,
that stinks.
yeah.
Yep.
Now, I was talking to my bank,
Yep.
and they're telling me I can renew at 4.25.
How nice of them.
Is that good?
That's high. That's high.
Yeah, that's high.
What should I be aiming at?
That's high, but not only that, do they want you to renew now or in March?
Well, now, early in the new year, whatever.
Yeah, but why? If you're at 2.25 and you have until March, why would you renew early in the new year and not in March? That's my question, right? Number one. Now, again, and I think I talked about it. I talk about it many times. If you're worried about interest rates going up, then I would say if your bank won't guarantee that rate, which, by the way, is not a good rate because you can get 3.89, 3.99 today. Now, I feel like on Monday or Tuesday, banks are going to raise some of their rates, so I think they're going to be in the 4s on Monday or Tuesday because the bond market went up yesterday based on the employment report. But either way, I mean, we might have those rates into Tuesday, Wednesday. If you want to lock in that rate, we can lock it in and hold it for you for 120 days, which means that you can continue to pay 2.25 between now and March, and then you've got that rate guaranteed. So if you're worried about interest rates going up, I think they're going to go up next week, but I think after that we're going to have kind of a pause over the Christmas holiday, and I think if anything in January we'll start to see the bond markets retract a little bit, and we'll see those rates come back down. But you shouldn't be in a rush to early renew because you've got a great rate for another 3 months, and why would you give that up?
Exactly.
Well, that 4.25 by Tuesday, Wednesday might be 4 and.
Well, at the bank, but for us, I mean, I think we might have 3.89 or 3.99 on Monday. It'll be 4.09, 4.14. So it'll still be better than what the bank's offering you. But it's a shame that the bank is offering you that and telling you that you might have to do it early in the new year because you shouldn't have to. That rate should be held by your bank, but banks don't do that. Banks will hold your rate for 30 days, not 90 or 120 days, and you should do better for yourself than that. So. I would say give me a call on Monday, Tuesday, and more than happy to discuss it in more detail with you.
Yeah, they're telling me that I can't go out and get a new mortgage somewhere else because my income isn't up there anymore since retirement.
Well, again, that's another ploy that they use to try and keep people from going elsewhere. It's I worked at a bank, so I know those lines. I got taught those lines. So give me a call, and I'll tell you whether you can go somewhere else or not. And even if you can't, they don't have to know that, and they still got to be competitive on your renewal come March.
Okay, so I'll wait a couple of weeks and see what's going to happen with the interest rates coming up or down, and maybe early New Year.
Honestly, give me a call Monday, Tuesday. At least I'll go through some of the options with you if you can.
Okay, thank you so much.
Oh, you're welcome.
Thanks so much for the call, Dave. Really appreciate it. No. Well, that's interesting. So, yeah, I know we talked about this a few weeks ago about, getting into retirement and, mortgages. There are options, though, are there not?
There really are. I mean, people have a lot of equity in their homes that might hit retirement age. Retirement age is not about, for a lot of people, it's not about giving up their home. It's about staying in their home but trying to make sure that they can elongate how long they're in their home. So they can stay in their home for the next 10, 15 years and not be forced to sell. And if they've built enough equity in that home, then the plan is to try and figure out a method where we can keep the payments in line with what you're getting in now that you're retired with the money that's coming in, and make sure that you can afford to stay in there. And I'm the honest guy to tell you, listen, I think you're going to struggle to be in this house. Maybe we need to go for a reverse mortgage. Maybe we need to put something in place. But just so you know, you're going to be eating up at your equity every year, and maybe it does make sense to sell. If your mortgage is at $450,000 on a $600,000 home, you're not going to be able to get a reverse mortgage, number one, because they won't go that high. And then number two, if your income that's coming in is $2,000 or $2,500 a month, you can't afford to stay in that home.
You can't make those payments.
You just can't. So you're just eating away expensively at your equity. Maybe it's time to sell, and let's figure out another way to put that equity to work that you've worked so hard to generate.
Frank, you're probably getting really close to the age too where you have to make that decision whether you can stay in your home too, right? I mean, it's just around the corner for you.
Well, I'm married, and I've been married for 39 years. So
you've been happy for what, 30?
No, I've been happy for 39. I joke, but I've been happy for 39. But when you're married, you continue to work. So yeah, retirement's not on the tip of my tongue at all. No plans at all. But
you're probably just around the corner from getting away from stairs, right? Because at your age, with your hips,
they got stair lifts. So if I need a stair lift, I'll get one of those stair lifts. But so far so good. But the truth is that I always say people retire because they may not like what they're doing. But when you love what you're doing, I don't see you retiring, Paul. There's no way that I see you retiring. Do I see you? Well, right now your team does 90% of the stuff anyway, but maybe it goes to 95 instead of 90,
hey,
right?
Listen,
you only do.
Listen, I have a young girlfriend. I can't retire. No.
I don't even know where to go with that one.
No, me either. See, I'm speechless.
I mean, will I start taking a little more time off? Yes, I will. But I also have the most incredible management team
and that's just it. You surround yourself with the right people, and all of a sudden
it's one thing. I know we have to go here to say, but it's probably one thing that I can toot my own horn that I've done really well is hire people that are better and smarter than me to be around me.
It's not hard.
It's not. I agree. It's not too hard. I know it's not too hard.
Including you, Greg. I mean, you bring it up way up the team.
Greg was. Honestly, one of my best hires.
Yeah,
absolutely,
great hire.
Yeah. Don't ask for a raise, Greg.
I was just going to say right now, Greg. All
right, birthdays, Frank?
No birthdays, but I do have some sad news. My brother-in-law's mom passed away last night, so I want to send sympathies out and condolences to the whole family. So
sorry to hear about that.
Yeah,
Paul.
No, the only thing is next week on the show, it might be a little bit rough because we have our company Christmas party in Montebello. I'm taking everybody and their spouses to Montebello for the night, and so it's going to be let's just say a good little shindig. So
might be a slurry show next week.
Yeah, it might be.
If you have a question between now and then, head over to realestateandmortgageshow.com, send it over, and Paul and Frank will answer it by email right away, and then we'll get to them on the air in the next couple of weeks.
We do have a couple that came in that we couldn't get to this week, but in the next couple of weeks we'll get to them.
Have a great week, everybody.
Okay, and please continue to support local business and charities, everyone.